Very good morning, everyone. Charles here, Frgnt Daily Chart Analysis, Frgntforex.com, and of course, Frgnt Mile Street. Very good morning to you. It's just approaching 10 minutes to 6 local time here in Milan. And actually, the truth is, I've attempted to make this video a couple of times, but for various circumstances, I've had to delete them. So you'll have to bear with me now. I'm struggling with a little bit of allergies. It's pollen season, but nevertheless, this is a video that I'm quite determined to create. Therefore, I'm going to have to create it. So, we'll get straight to it. My charts still haven't been cleared from Friday. That's because, again, I'm just determined to make this video. So the first thing we'll go through is let's highlight the importance of actually creating your forecast for the day. So for me personally, when I am creating my forecast, I am in probably my best frame of mind. It's roughly 4:30 to around 6:30 in the morning. I have zero distractions. I am pretty much in my element. The market is not in my trading session. Excuse me, I'm just watching Asia do its thing whilst I prepare for pre-London Open. So that's one thing to mention, and that is why I'll always implore everyone to have their forecast of the day. It doesn't mean you strictly stick to your forecast, but one thing to always remember is that your forecast, if it's done in line with, let's say, how I've just mentioned, that is you viewing the market and understanding in the best frame of mind what you would like to happen in the market. Therefore, I know once price gets to those certain areas in the market, there's only very few little things that I must do. Double check that my analysis is actually still correct, of which you will see I continuously seek to post and update. Double check rather that the setup still aligns, and simply just wait for my entry criteria. No other real form of analysis should be done, providing the price is actually at the areas in which that I've forecasted they've got to. So without further ado, let's take a look to see what the plan was on Friday, which would have been the 17th. Excuse me. Now, Friday is statistically my best trading day, and that's as a result of a few factors, but the most important factor is we'll talk about the technicals. For the past 2 years, my statistics, as I've said, have shown that it's been my most successful day in terms of risk reward backed. Now, this is going to be a long video, team. The reasons behind that, in my opinion, is simply based on the fact that I've understood if the market is looking to push in a certain direction for the majority of the start of the week, it's more than likely that Thursday and Friday, price will then do the opposite. So let's say price pushes towards the upside Monday through to Thursday. Then, of course, Friday we will look to seek if we could get a little bit of the pullback. Now, as we go to the charts, that will become more understandable. So we'll take a look at the DXY. Again, price already has all of the annotations still on that. The DXY, what we was forecasting, let's have a look. April the 17th. Again, pay close attention to the key areas. That after this higher high created on that weekly time frame, in my opinion, I expected, as always, naturally after a higher high for a higher low to be created. The question I need to ask myself as a professional trader is, where is it likely for that higher low to want to be created? And do I even need to be in the market to see the DXY create that higher high? Possibly not. All I need to see is a reaction from a certain level that I have put in the market on that DXY for me to trade my cross pair in order for me to at least be pushed towards break even. So that's my forecast of the DXY, expecting that weekly order block to provide the liquidity towards the upside, refine within that weekly order, but we have the daily, and of course we have that gap to the left that needs to be refilled to balance the market. And in addition, we then have the confidence that price would look to want to push up and fill this market gap here to rebalance the market. So let's take a look to see what we have. Higher time frame. if I can. There we go. So weekly time frame, we can see that price came down to the area that we were forecasting. It was already there, but the importance of that is we've refined that area down into the daily time frame, refined further down to the 4 hour. Now, one thing I must mention, when you're trading smart money concepts, and let me double check we're still recording. We are indeed. When you're trading smart money concepts and you're trading those higher time frames, more often than not, you are going to be trading against intraday perspective. Therefore, the title of this forecast was longs almost confirmed. And now for me, I post quality as well as quantity, and if I think that price action is not confirmed in a certain direction, I won't feel comfortable posting that. So it's very important, the key word here being almost, and I'll explain the reasons behind that. So for the DXY, in my opinion, to be truly confirmed as bullish, we are going to need to see some significant structure points, particularly on even the higher time frame, to be confirmed bullish. And now what we can see is that price on that 4 hour time frame is simply creating lower lows and lower highs. And most importantly, we are still printing price action below the 4 hour 50 EMA. It's unfortunate also that our higher time frame EMAs are also quite a distance away in terms of not actually providing us with the confidence to support the trade towards the upside. In fact, quite the opposite. The EMAs are now becoming our targets as a result of the distance that they are away from our entry. Now, I mentioned entry. I'm not trading the DXY actively at the moment, but you see where I'm taking this. I mark the DXY with the same level of professionalism that I mark any of the other pairs I'm trading. So I trade specifically, or mostly, the cross pairs of the DXY because I like the fact that you can get the DXY as a free confluence. It costs nothing extra just to mark the DXY up to give yourself a faint idea of where prices look likely to turn around based upon the DXY. If you can understand where price is likely to turn around on the DXY, that gives you more of a chance to actually understand, well, am I looking at the correct place on my cross pair to understand whether price is ready or not to take a turnaround from. So again, without beating around the bush, why or how could this be confirmed bullish? Well, we can see, and what's always likely to happen when price hits that higher time frame order block, more often than not, we are going to see price range. And what do we have here? At the bottom of a trend, so i.e. at the bottom of this 4 hour trending market, we could say lower low created. We've broken structures from that most recent high, i.e. the most recent higher low. First low in the market. After the low, what are we expecting? A lower high. It's unfortunate then at that stage we had the market gap, but most importantly, price respected this 4 hour 50 EMA and gave us what we expected to a certain instance, a lower low. Expect now a lower high for a lower low, a lower high for a potential lower low. That lower low then took us perfectly into this market gap area, filling the gap, rebalancing the market, and then it's down to me to understand on the way down, do I have a particular entry setup on the DXY that would make sense across my cross pair? So let's pay attention to the lower time frames. And before we do so, to answer that question, so at what stage are we confirmed bullish? Well, of course, for me, it would be this 4 hour candle closure above this ranging area, or if you don't consider it a range, i.e. for me, I can see quite clear highs, quite clear lows in the market. Once you get that 4 hour candle broke and closed above that area, even better if it was to close above the 4 hour 50 EMA, we'd simply be expecting much of the same scenario here. After the most recent high, we'd then be expecting the higher low for a higher high, higher low, higher high continuation for the trend to then start again. We don't have that, so it's down to me to understand, am I happy to take a trade on the DXY considering it isn't confirmed bullish, or can I understand that I can locate areas on the DXY where indeed I could look for a reaction from? So that's what we did. So let's take a look at the 15-minute time frame. to see exactly how and why I was able to get in two positions on Friday. So that would have been all on GBP US dollar. We took a short Asia range position here that stopped myself out break even, and I took a nice short position right up at the highs and just bagged a nice 3% to end the day. So let's take a look again to the DXY. I want to pay careful attention to the time. Let's bring this up. Oh, I definitely want to stay on that page. Cool. So you'll say, Charles, why have you looked at the DXY potentially from this area, not these other areas? Now, I'm with you. Granted, this 15-minute order block has no real right to be there. However, what I've done is used, let's say, all of my trading knowledge to understand what was going on at the time of me sat in front of the chart. So, on Monday, I'm here. I'm viewing that price is simply trending in a range on that 15-minute time frame. So I've done a very simple action, and I've simply highlighted that entirety of that area. But most importantly, below, what you can see is there's a clear session low in the market, a clear session high. So I'm just going to call it a range. Now, the basics in terms of emotions when trading a range, and also the psychology of traders, we understand that there are sell limits placed here, active sellers looking to push price down, and there's also buy limits placed at the lows, where traders are looking to trade, or retail traders I should say, are looking to trade price up to the highs, most of which are not waiting for confirmation, most of which are just looking at support and resistance and taking the short or the long. So my understanding is that, well, if I was to trade this as a standalone pair, can I locate an Asia range, or can I locate the fact that price is above Asia? And this is the first order block, or rather this order block is the first order block below Asia. Therefore, if I'm going to look at where the liquidity lies based on this pound sign just here, I can see that liquidity will lie potentially to the upside. But what also that means is, because this is a bit of a nearly area in the market, it hasn't proven itself, i.e. we don't have any clear breaks of structures from this area. What would be a better position is to look for price, actually in fact to seek if price would have broken structure from this area, which unfortunately it hasn't broken the main area, but we do have some intricate breaks of structure which we'll get to in a moment. Now, so this area here, I had to understand that if I was going to trade this position as it is on the DXY, I need to be incredibly aggressive if I was going to look to long from this area, because I don't have any real confirmation just yet that the DXY is looking too long from that area, despite being in a 15-minute order block and despite being the first order block below this Asia range that is available for me to take as an Asia range trade on the DXY. Now, going over to GU, I needed to understand, does GU provide me with the same or a similar type of entry criteria without me taking into consideration the DXY? Now, for me, I'm not going to go into the depths of an Asia range setup, but what we can see is that on the 15-minute time frame, we are very much so clearly making lower lows, lower highs, lower lows, lower highs, and prices trickled down to make that lower low. Therefore, it's my job to locate the first 15-minute order block above, which I can attain has created that break of structure. As you can see here, there are no other 15-minute order blocks in around that vicinity. So I've given that ownership to this 15-minute order block here. We're a nice distance away from the Asia lows as well that were available. So the Asia range setup is very much so a play. However, the knowledge that I've gained from the DXY suggests that I need to be very aggressive in my management, because the DXY is yet to show me signs that we are ready to actually go bullish from that area. It would be a lot better if I had a break of this area, a pullback, and then off we go. But recognizing that the DXY at the moment, particularly its performance over the last weeks and months, when the DXY is looking to move, particularly at the end of the trading week, the DXY is very unlikely to allow any room for pullback. The moves are very much so exponential, without any seeking pullback. So therefore I recognize for two things. The DXY, if it moves, it's going to move fairly quickly. And as a result of this being a nearly area, I need to treat my cross pair trade, i.e. GU, with the same level of, let's say, tendency. I need to understand I must go break even very efficiently here. Now, as we can see, I'll go down to the 1 minute time frame to create a better picture for you all on that Asia range short. And it's a very simple procedure. What we can see, I don't know where my other risk reward tool has gone, but two scenarios were shown into Frgnt Mastery. And again, I like posting on YouTube because I'm a little less restricted in what I can say. I'm not looking to be banned again on TradingView for mentioning Frgnt Mastery, but Frgnt Mastery take great benefit, I hope, from not only these posts that are posted, but also the breakdowns. So these are all well and good having your analysis and forecast for the day, but actually recognizing how to trade them is a separate entity in itself. I get a couple of messages saying, hey, your area didn't hold up. Well, never would I ever implore anyone to take a position directly from an area in the market without seeking confirmation. And we'll get that evidence in a moment just now. So, as you can see, straight down to the 1 minute time frame, and I won't bore you with the intricacies of the Asia range, but you can see prices clearly trended up to the upside, making higher highs and higher lows. Then we have that low in the market, creating the most significant break or structure of that most recent higher low, of which created the higher high. So this is the first break. So the lower low, can we then accredit a order block on the 1 minute or even on the 5 minute time frame to accredit that break of structure to? And as you can see, my illustrations are still there, sent over to Frgnt Mastery. You've got two options here, guys. You can either take this short position here based on the highest 1 minute order block, or you can take this position here, which is a more aggressive trade. However, you are still going to need to manage your position in the same manner of which you were to take the position from these highs. So what I did, once price made this break or structure, I simply set my sell. In fact, that wasn't the sell limit. I waited for price to push up into these areas, and then I took an instant execution when price was around about, so we got the rejection, and then round about there, and I was looking for Asia to fill. Unfortunately, it wasn't to be. We had the break or structure to the lows. As soon as we had the further break or structure of this area, the trade was locked in a break even. And what we can then say is price went on its merry way based on what the DXY had to offer us. Now, if we go back to the DXY and understand why that could have occurred, well, we understand here that the DXY was in a bit of a nearly area, hence we're managing that trade aggressively. Now let's take a look at this order block just here. We have this 15-minute order block. Again, not really proven in the game, I would say, this 15-minute order block. It did break an intricate break or structure, particularly here on the 5 minute or the 1 minute time frame. However, what we must clearly understand is price is making lower lows, lower highs, lower lows. So therefore, this area here becomes our most recent structure point. Therefore, for me to have the full confidence that this area in which price should return to should provide me with some liquidity towards the upside, I need to see this area broken in the market. It's unfortunate we didn't. However, as a result of not getting that break, I would then need to seek that confirmation that I would grab here down at these lows by way of candlestick formation or even complete lower time frame break or structure. What I'm happiest to see, and again, apologies, you can see all of my annotations through trying to make this video a couple of times, but the good news is price, the DXY had much different ideas. Price absolutely flew straight through this area, meaning that the other trades or the other pairs that I was really wanting to trade were no longer available, and we'll take a look at that now. So I was looking to speculate on AUD USD short bias. Is that the correct date? Yes, it is. From the highs, Euro US dollar, looking to short from the highs, and GU, of course, I was looking to short GU wherever GU's gone, from the highs, or based on an Asia range trade. There we have it. So if we head over to AUD/USD, in fact, just one thing I'll mention before we go is, let's have a look at the timings. So I'm in UTC +1, 10 o'clock in the morning, price is in that area. And then just to show how I am using it directly as a confluence, look at the time at the bottom, 10:15. Price is in the same area. So it shows me at that time, right, here is the time you need to start looking for your breaks of structure, start getting in that position sooner rather than later to manage it. So AUD/USD, as a result of that bearish move on the DXY, this became invalid straight away. As soon as price breaks and closes above an area, which is a question I had in the chat, when price breaks above your area that you're looking to short, what are you then looking to do? Well, it's quite simple. I'm then forced to get rid of this completely. I understand the new phase in the market is now high, higher, low, and for me to get the full confirmation, I need a structure point to be broken. Alternatively, if I want to be aggressive sooner rather than later, I need my foundation set by way of order block selection. So here would be a 15-minute order block that, based on my higher time frame analysis, if I'm still happy to short within this area, let me create the scenario, I will simply wait for price to return back up to this area, give me that lower time frame break for me then to take the short back down. Nevertheless, the key point here is that price was no longer available for me to short on a pair that I was looking to short on. And that's fine, right? However, similarly, or I should say in addition, similarly, price action on Euro/US dollar, also what I wanted to trade on. It smashed through both of my areas quite conclusively, and again did not offer any form of immediate pullback for me to take an aggressive short. However, what we will see, and thankfully I should say, GBP/USD provided a lovely angle to take that position from. So let's take a look at it. Higher time frame GBP/USD, we were forecasting rejections from the highs on that weekly time frame by way of weekly order block. But most importantly, the rejection that I was looking at is coming from that wick imbalance. That wick imbalance shows a great deal of information if you can understand it. The wick that I'm using is over here, Monday the 23rd of February. Now what this wick illustrates to me is at some point, and it is obvious, but some people still don't get it, at some point this candle was incredibly bullish. Now for whatever reason the market price has failed to close where price went, and in fact price did absolutely the opposite and closed bearish, leaving a tremendous wick, an unbalanced wick to the highs, meaning for me, when price looks to get back up to that wick imbalance, I now have an opportunity to take advantage of the fact that I have a very easy, and again, it's a free clue in the market, that's where sellers could well be lying, Charles. So take a look into that area to seek whether you can find any form of structure, identify some setups, and then potentially you have yourself a nice trade. Now, what I like from that wick imbalance, pay careful attention here. Over the last few days when prices wicked into that wick imbalance, prices failed to close and break above on that daily time frame. That's very important. On the higher time frames, the wick imbalance has done its job. Please note that the wick is coming from the weekly time frame. So therefore, any price action on a lower time frame aside from the weekly is still going to provide you with a wick to the high once that weekly candle has closed, providing the weekly candle hasn't closed above. So I hope that makes sense. So you will see on the lower time frames, price is certainly above that wick imbalance in this short area just here. However, the importance of that wick comes from that weekly time frame. Again, showing light to reasons why potentially that my Friday is statistically proven my better day, because I understand that these wick imbalances only have a certain duration of time on a Friday before that candle is now closed, and it's now or never for that wick imbalance to do its job. Right, so we've seen the importance of that daily time frame. Also looking at the 4 hour, I need to understand a couple of things. What phase of the market am I in? Am I reading it correctly? So the first thing that I came to analyze is the fact that, well, potentially this could be a high. This could well be a higher low. So if I want to take an entry, this could well be me entering the market on a phase of push where market is likely to create that higher high. However, using top-down analysis and understanding at all points in time where you are and the reasons for your bias looking short. So we have to understand that we are in that wick imbalance area. We need to understand that come Friday, I'm looking to reject this wick imbalance and close bearish, at least below it. I don't know where price is going to close, but I have a good forecast that that wick is going to want to provide some liquidity to the downside for the close of business on Friday. So there's that thought process. Then the second thought process I'm going through my mind as well. If this is not going to be the higher high push phase market, perhaps we are now in the territory for prices reached a high. We now have a range bound market just here, which we can identify on those 4 hour candles. Then what we have is price leaving that range, creating what? The first low. After the low, I'm expecting a rollback into a lower high scenario before price taking down for the lower low. So that's the thought process that I was leading with, the latter. So we'll take a look into that. What else we can see here to support that bias is the fact that I now have a 4 hour order block to trade from. I'm not just trading by way of thought process. I have the technicals to help me. So I've got this 4 hour order block that I'm waiting for price to pull back into. Can I seek some confirmation before looking to go short? In addition, once I then roll back to the free DXY, the free index, which will allow me to guide my trade, does it make sense on the 4 hour time frame for the DXY also to look to reject from that 4 hour order block? Well, of course it does. I have this market gap here that price is looking to fill. I have the only 4 hour order block available down at the lows within that weekly order block highlighted. And also what we can pay careful attention to is we recognize already that we are potentially in a range bound market. What will potentially happen is we're seeing exactly the same of what we were thinking on GU in the morning, that if price is just being bounced between the highs and the lows, what would happen if there could be a liquidity grab? And I don't like to talk about liquidity grabs. It's just price reaching for an obvious area. Here is that obvious area. The market gap, the 4 hour order block before tapping into that area, and off it goes. Hence why I recognize now, again, if I want to be taking a cross pair position long from the inverse area, so don't forget GU is looking similarly to this at the moment with price. We've made the low, come back, and we're waiting for this move. I need to understand that this could well be the market gap fill and the straight push to the highs, meaning that I need to be quite aggressive when getting in this trade, and my management style doesn't need to be, and hence why I left that trade open for the majority of the afternoon. Now let's pay attention to the DXY. We're looking at 12 o'clock in the afternoon when price dipped into the area and around about 1600. So let's take a look now at GU. So similarly, what do we have up at the high? So I hope that makes sense first and foremost. Well, I'm getting the confidence from the DXY. Now what we can also see on the market is that we are clearly in the realms of a session high. And what I mean by session high is we have an area in the market where it's evident that price is failing to break above. However, what we'll see on the lower time frames is that we're just getting these gentle pushes away that actually counts very nicely for structure. And you can see that here on the 4 hour time frame, but we'll go to the 15 now in a moment. So that's the 4 hour spoken of. Again, I need to emphasize the fact trading higher time frame biases, trading smart money concept More often than not, you will be trading against intraday perspective trades, or trends, I should say. Therefore, gaining your confirmation before entry by way of either 4-hour candle closure above or below an area, or simply your 15-minute structure being broken to the side you want to trade, is always, in my opinion, the highest probable way to gain your confidence, and as well as your confidence for that trade. So, what do we have? And that also brings me on nicely to mention that the Asia range setup, it allows you to trade without having the higher time frame guiding you. So for example, on US dollar CAD a couple of days ago, I took a US dollar CAD short based on Asia range. Let's have a look. US dollar CAD 16th, I think it was a day before. A US dollar CAD short here, based on the Asia range. Now you will say, well, Charles, you were forecasting DXY longs for the majority of the week, if not the month. Absolutely, and I still stand by that. And what you can see here is that on that US dollar CAD trade, I was even within that higher time frame weekly order block looking for price rejected to the highs. So of course, based on the higher time frame strategy, I wouldn't have an opportunity to sell because I would not short into a higher time frame order block by way of which I'm looking for price to reject towards the upside. However, trading the Asia range strategy allows me to bypass all of the higher time frame analysis and just focus on 15-minute structure, 15-minute breaks of structure, Asia range, and we could trade any way in which direction you see fit. But more often than not, your Asia range trade is going to conflict against your higher time frame bias. So I trade two separate strategies alongside each other. So, or it can be quite confusing, particularly in this element. I have to double check, well, what strategy are you using? Because you cannot use a higher time frame directional trade here when trading into a higher time frame weekly order block where you are clearly expecting the opposite to occur. So that's just a bit of an insight onto the Asia range setup that I'm using. So thankfully here on GU, Asia range setup, it was in line with the higher time frame buyers, but I don't think higher time frame bias, it was particularly ready to short from there because we had much better areas where the DXY would look to pull back to, and also we can see up here we have better areas where GU as the cross pair would also look to pull back to. So we'll take a look at that. So we've spoken about the 4-hour, we've spoken about the daily, now to the 15-minute time frame where the cookie starts to crumble nicely. So what we can see here up at the highs, it looks a bit scruffy at the moment because I've got a lot of annotations and I need to clean my charts. But nevertheless, I mentioned the session high, so an area in the market where price is failing to break above, but price is still making those gentle pushes away and still respecting that session high. So I'm not just trading from a session high, I'm also trading from that 4-hour order block. And I also have the additional confluence that the DXY is now in an area where it should be looking to reject quite quickly, in my opinion, as well. So what I need to understand is, well, do I even have any breaks of structure to promote me to look to take for that short? Well, as you can see here, we have many significant and I would say insignificant breaks of structure on the way down. But what we can clearly call it the facts. Break of structure, we continually break structure points. Therefore, if price wants to return all the way back up to the highs, of course, here becomes the best area to short from. This raises a great question. Well, how could you take a short position when price has closed above your 15-minute order block? You can see that quite clearly. Well, what I have to revert back to is the reason why I'm looking to take that trade. Wick imbalance. So of course, price does not always have to respect my order block, but what it does mean is that I can no longer use that as a confluence to take that trade. So the first thing I have to do is use all my additional confluence and understand what's going on. Using a session high, of course, you will have, and I hate to use the word, but it's the word that everyone can understand, manipulation. Session highs are based on my interpretation of the market. The session high may not be how I see it. The session high could be slightly higher, it could be slightly lower, but at the end of the day, the session high or session low becomes an area in the market where you can quite clearly define is not being broken above for whatever reason. And we have that combined with the confluence of the wick imbalance. So it becomes very much so a high probable area in the market. So if we now refine this area down to understand how I'm able to get in this position. 1 minute time frame straight away, recognizing that I will not have a tremendous amount of time for the pullbacks based on AU and EU. I recognize at this stage I've got to be very aggressive when getting into this trade. However, my interpretation of aggressive isn't really that aggressive, I could assure you. I'm looking for breaks of structure first and foremost. Now I've got two options. Understand price action. Where's that most recent high come from? Somewhere in this region. Now, if I know that price is going to look to move in a very fast manner, do I have the time at already, let's say, 3:30 in the afternoon for price to break a significant structure point, pull back, and then push towards my take profit? I highly doubt it. Therefore, what I'm forced to do, well, I'm not forced to do it, but what I recognize I'm able to do is start pushing my structure points slightly higher to understand, can I get a break of structure using the fact that I know where I am in the higher time frame. So I've called this an area in the market. Again, apologies for all of the drawings. But what we do have is a significant break from that area. So we've been patient there. So now I've got two scenarios. Either use the 1 minute order block right up at the high as a result of using the 1 minute time frame that has actually shown us that break of structure, or use a 5 minute order block and seek further confirmation when price gets there. So I decided to do this one. I used the 5 minute order block, as you can see just here. And then when price came back into that order block on the lower time frames, it's then my job to seek a further confirmation by with candlestick formation. And for me, this scenario here is absolutely textbook. So remember, this is the 5 minute order block. We have the 1 minute up at the highs. I recognize where we are, the time, and what's going on, and how quickly I have to react to this. So we can see this beautiful bearish engulfing candle taking out, let's call it, around about 10 to 15 minutes worth of price action. Bearish engulfing. That then allows me to have an order block left behind, where my job is very simple. As soon as we've had this snap in the market by a bearish engulfing candle, this entry becomes pretty much textbook. And that's all she wrote, to be honest, team. So I hope that covers a little bit of information for you all. I hope that answers some questions. And yeah, my risk reward ratio, I only took 3% out of the market. I'll be honest, I probably should have held it for a little bit longer, but as they say, hindsight is a beautiful thing. 3% at the end of the day after taking one break-even trade isn't too bad by any standards. And again, just to highlight, of course I was looking to short EU, but I wasn't able to. I wasn't able to gain entry back on the retests at all. AUD US dollar, of course, that's been a pair that I've been forecasting to short pretty much for the majority of last month. US dollar CAD, well, I'm using that as a confluence. As well as that, I mean, I'm no stranger to trading US dollar CAD, but for me, I'm using it as a nice confluence to understand the market phase of US dollar. And of course, EG, well, I was holding EG longs for a while, to be honest, from I think Tuesday, as a result of liquidity, session low, you know the drill, break of structure, pullback, I'm in the trade. But it's just to show that you can forecast as much as you wish. However, it's down to your selection of your best trades that you want to take. So again, I hope that message hits home, team. A video that I was pretty desperate to put out. As you can hear, I can barely breathe based on my allergies so early in the morning. But nevertheless, the video has been created. I hope you seek benefit from it. And of course, if you're looking to learn more about how I trade, my Asia range setups, which is just a standalone strategy, you don't necessarily have to trade that alongside higher time frame directional trading. But I like both. I like the fact that Asia range allows me to cut all of the noise from the higher time frame, just focus on 15, 1 minute and 5 minutes, intricate breaks of structure, price action, and what is price actually doing at the time. And of course, I also love the higher time frame directional stuff, which really pushes your technical analysis to a different level. So if you're looking to seek how to find out how, then of course Frgntforex.com, gain some access into Frgnt mastery and have some breakdowns your way and how to approach that market every day. So again, 14 hours. I did make this video, but yeah, 2 parts. I don't think it's cutting it. Again, team, all the very best for your trading journey. Take care. Have a lovely day. Charles.